Welcome back, and you're watching Market Fatafat on ET now. Let's keep it going with all the stocks that are buzzing in trade, either on the back of news flows or on the back of technicals. And now on the technicals, we have Dhwani Patel joining with us, founder of Pinboard CPI, joining with us this afternoon. Dhwani, very good afternoon to you, and thank you so much for joining in with us on Market Fatafat. And Dhwani, the first stock that you picked up for us today is from the pharma space, and that is Cipla. This one, what a move it saw yesterday, because it hit a multi-year high yesterday as well. Now today we're seeing a bit of a subdued move coming in on Cipla, but what are the charts now indicating for Cipla? Should we expect the run-up we saw yesterday to continue?
Absolutely. The run-up that we saw yesterday was a breakout that we are witnessing over here. In today's session, we are definitely seeing some cool-off taking place over here, which technically suggests that we are expecting some dips coming in the stock, but this again the trend suggests it's a buy on dip stock. So my recommendation here goes that whenever you find the stock taking a dip around 1100 levels, one could long into this particular one, and for a further run up to continue. The breakout level for this particular stock had come at 1080. So 1080 is an ideal stop loss that one needs to maintain over here. For anybody who's already holding longs into it, can also trail their stop losses over here to 1080 now.
Alright, moving on. Then the next counter is JK Lakshmi Visa. It is down. The stock is down almost 6% in trade, and it is on the back of quarter numbers. Do take us through what the report card is looking like.
Right, so JK Lakshmi, they reported weak set of earnings, and that is reflected in the movement of their stock performance. It's down around 6%. Talking about the revenue, that on year-on-year basis, it was up at around 4.6%. Muted growth, but on sequential basis, it was down 7%. Talking about their volumes, that increased 5.7% to 32 lakh tons for the quarter. Profit was down 30%, and that was impacted by their operating performance, while the margin, that also saw a contraction. It contracted to 11.3% versus 15.5% seen last year. The management highlighted that the operations, that was impacted because of the unprecedented rainfall, as well as cyclone Biparjoy, which was in Gujarat as well as in Rajasthan. So that was the reason which impacted their the stock, the performance of their operating performance. And the management said that despite this fall in the margin, despite the fall in the EBITDA revenue, they are quite confident going forward in their outlook, because they said that the increased, this is on the back of the increased spending in the union government on the infrastructure projects. So additionally, the company also has proposed a raising of funds, and this is to the tune of around 2,500 crore. So that is why we can see JK Lakshmi Cement, it's reacting to this weak set of earnings.
Yes, that's JK Lakshmi Cement reacting to its numbers. But moving on and talking about a mid-cap IT name on the charts. And Dhwani, you picked out Mphasis for us. Now, in the last week or even today itself, when you look at it, it's a bit of a fall. The last 6 months managed to see some bit of an up move over there and a slight bit of a green. Now, what are the charts indicating for this one? Is it time for a bit of an up move to come, or maybe some consolidation will still continue?
So in this particular counter, we are expecting that on a weekly chart, definitely we have seen some good moves coming in over here. We have closed above its 250 period exponential moving averages earlier, but now we are expecting some profit booking taking place in this particular counter. I'm expecting here a dip that can extend up to 2100 level. Over there, where the stock is holding a good support level, one could go long into this particular counter, but from current levels, it's a sell coming in over here for a target of 2100.
Alright, then moving on, Harsh, Intellect Design is in focus today. It's up more than 15% in trade. Tell us what is driving the stock up?
Well, yeah, super strong numbers. Ankita, what we're seeing, total revenue has gone up by 19% year over year. And within that, that revenue basket, you saw platform revenue up 21%, you saw license revenue up 46% on a slightly lower base, and you also saw AMC revenue up roughly 22% again on a slightly lower base. You're seeing EBITDA also grow, and EBITDA in fact has grown stronger than that revenue number. It's up 33%, and that's where the key is with regard to even whether stock price has moved. You're seeing EBITDA up from that 116 crore mark to 155 crore year over year, and margins therefore going from the 21.5% mark to 24.1%. Profit after tax went up a solid 36%. Therefore, profit after tax came in at 93 crore versus at 69 crore in Q1 FY23. Strong set of numbers. Intellect Design up and away.
Okay, surely keeping an eye out on Intellect Design. Let's move on and talk about Dr. Lal PathLab. Yes, they came out with their numbers yesterday. When you look at the numbers, it was a beat on the EBITDA and the profit front, but revenues, that was something that was a miss. Now, we have a note today that is coming from Nomura. They have downgraded the stock to a reduce owing to the recent run-up that we've already seen in the stock price, and especially in terms of the numbers that they're seeing coming in. Yes, slight bit of a miss on the revenue front is what they're seeing. Margins were mainly supported by the impact of the price increases as well as the case mix, which was supporting the margins of the company as well. So yes, higher than the company's guidance is what we're seeing coming in. They have a higher company's guidance of around 25% for the full year of FY24 as well. They're maintaining the guidance of 25%, I beg your pardon, for FY24. So keeping an eye out on that, but Nomura is already saying that we've seen a very sharp run up in the stock in the recent times, and that is why they're downgrading the stock to a reduce. So that is why we're seeing some pressure coming in today on the stock price of Dr. Lal PathLabs as well.
Well, moving on then, Dhwani, LTI Mindtree, that counter has been up 8% in the last 6 months and almost 11% in the year to date. What are the moves coming in on that counter? What are the charts saying?
When you're talking about LTI Mindtree as a counter over here, what we are seeing overall into the chart structure of this particular counter is that the IT pack is taking a beat up over here. We are definitely seeing some down moves coming in on this entire pack over here. When we are talking about LTI as compared to Mphasis that we have just talked about, LTI shows even much more weaker structure over here. We are expecting a fall that should continue in this particular counter to 47.50, and that is a point where the stock should take some support and one could go long on those levels, but ones who are holding short, the profit booking level comes at 4750.
All right, moving on then, FMCG major Nestle also reported its numbers, and the numbers were largely in line with the estimates. However, there was a slight miss that came on the volume growth front, and on the back of that, Jefferies came out with a note on Nestle, and they are maintaining a hold on the counter with a target price of 19,900. According to them, the volume was a miss, but that will be offset by the margin expansion. Now, the revenue growth was broad-based across cities and towns and also product segments, but they do like the packaged food story, but they feel that Nestle's valuations are expensive, and on the back of that, they have maintained a hold on the counter.
Keeping an eye out on Nestle on the back of its numbers. But let's move on and pull up the charts for India Bulls Housing Finance. And Dhwani, today I'm seeing a very sharp up move that has already come in the stock. Okay, I beg your pardon. Sorry, Lisa, that's your stock that you picked out for us. So Lisa, you're going to tell me why is this stock actually in focus today, and why is it buzzing, and why is the 6% up move?
Well, yes, the up move is on the back of the board proposing, they have approved the fundraise of around 35,000 crore, and this is also we can see this the significant move on the back of the dividend as well as strong outlook. So a lot of mixed factors coming in for India Bulls Housing Finance. They have said that they have proposed a final dividend of 1.25 per share for FY23, and the company will be seeking shareholders' approval for the fundraise, which will happen through NCDs. The company also added that they are emerging from a phase of consolidation that they were seeing over the last few years, and as the NBFC, they get into the path of profitability and the path of growth. The board has resumed payment of dividend to the shareholders. Well, this news it comes a day after Society General. They bought around 27.8 lakh equity shares of the company at an average price of around 127 per share. So this comes to around 0.59% stake in the company. And the company also said that they are well capitalized with capital adequacy in excess of 23% on standalone basis. So, well, on the back of a dividend announcement, strong outlook as well as bulk purchase by Society General, the stock is trending higher in today's trade.
All right, moving on then, Dhwani, the other stock in focus is Apollo Hospitals. Now, Apollo Hospitals in the last 6 months has already given a return of 24%, more than 24%. What is the upside that you're seeing? How are the charts reading for Apollo Hospitals then?
All right. So when you just told about eyeballs, I had to pull up the chart for that one as well, and I'm expecting 165 as a level technically there. Coming down to Apollo Hospital that we are talking about right now, the stock's definitely given us certain momentum. In past few days, we have seen some sideways movement that has been continued in this particular counter. But overall, on a weekly chart, the structure looks very strong over here. Above today's high, which is 5300 as a level, one could go long into this particular counter and hold it up positionally into their portfolios, because that would be giving a breakout from the current levels. 5900 is the next target that one should look over here for a horizon of 3 to 4 months, keeping a stop loss on the lower side at 5150.
Okay, Dhwani, thank you so much for that. Dhwani has given us two stocks in one. So, India Bulls Housing, she's spoken about a target of 165, while for the current stock, that is Apollo Hospital, she's spoken about 5,900 as a target in the next 3 months. So, keeping an eye out on both those names over there. But let's move on and talk about Aanta Pharma. Harsh, and why is this one in focus today? What's the news for you?
Well, yes, good set of numbers, Vinny. What we're seeing is revenue was up around 7.5% year over year. Seems to be some recovery there. But really, essentially, the margins is the number which one should look for. In fact, margins went up by over 20% on a year over year basis. And EBITDA margins were actually, around at 26.5% versus the 23.4% number same time last year. So definitely a lot of improvement coming in there. You're also seeing PAT, which went up 22% odd year over year. You're seeing PAT number of 208 crore versus 174 crore same time last year. We also have a couple of brokerage notes which are suggesting that the results were quite decent. In fact, they've upgraded. Motilal Oswal has upgraded their earnings estimates for FY24 and 25 by 7.5%. That's a big positive. You're also they also believe that the favorable US outlook will continue to support better profitability, and they believe that Aanta Pharma is on track to outperform the industry in branded drugs. Nuvama also maintains a buy on Aanta Pharma, target price 1,850, and they believe that EBITDA margins could grow or could be sustained at the 26+% mark even till FY26. So a couple of positives coming through, a couple of good brokerage notes as well. Stock is up and away.
Let's move on to the next one, and that is Supreme Petrochem. This one is down and out in trade, down as much as 3% in trade today. And why is that so? Because they reported a weak set of numbers, and when you look at it on a quarter-on-quarter basis, the revenue of the company has seen a decline of around 12%. Year-on-year basis also, the revenues are down by 18%. Operating performance has been weak as well, because when you look at it, the EBITDA was down by around 57%. The EBITDA margins have just come in at around 7% as well. Profits of the company also are down by around 57-58%, coming in at 69 crores. Now, what has also come in is that the company said that the domestic sales volumes of the manufactured product fell by 4% YOY, and that was mainly due to the offtake that they saw by the appliance manufacturers. However, when they include the export total sales volume of the manufactured products, that's increased by 8.7%. But clear weakness that was seen in the stock of the company as well as the earnings of the company in this quarter, revenue, operating performance, or the profitability of the company, all of them seeing a decline on a quarter-on-quarter basis.
Right, moving on then, Dhwani, the next counter on the radar is ICICI Lombard. Now that stock has given an up move of almost 20% in the last 6 months. So what should the investor do? Should they hold on to it? Is there more upside left?
Absolutely. The stock has definitely given fantastic returns so far, but we've already seen a breakout coming in this particular counter on 29th of May, after which we have seen a 45 degree of a parabolic up move coming in on this particular stock. And what we are seeing also is that it's a 5% channel that it has been trading into in the upward side. Currently, we are trading at the bottom of the channel, from which we are expecting an up move coming in from the current levels. One could go for a target of 1440, keeping a stop loss on the lower side at 1365.
Alright, the next counter in focus is SIS that reported its quarter numbers, and the numbers were largely in set with the estimates. The revenue increased 11% on a year-on-year basis. The consolidated PAT stood at 84 crores. That was also up 8% on a year-on-year basis. And on the back of that, Motilal Oswal came out with a note, and they have initiated a buy on the counter with a target price of 510 rupees per share. They see good growth along with margin recovery that will be driving earnings going forward. They also see a strong strong growth visibility over medium term, and the India business is expected to deliver a strong revenue CAGR of 19% and 25% in India's security and FM business for FY23. FY25. Now, with liberalization and formalization of labour markets and laws, SIS should be amongst the biggest and direct beneficiaries, and SIS has also managed to gain market share during the pandemic, and this trend is expected to continue, and on the back of that, this stock is going to be in focus today.
Absolutely keeping an eye out on SIS. But let's move on and talk about Indian hotels then, Lisa. How are the numbers looking like for this one? What is the stock currently doing?
So, Indian hotels actually they reported a mixed set of earnings. The revenue that was up 15.8% on year-on-year basis, but the EBITDA that grew lower than the revenue, it was at 9% growth, while the margin that saw a slight contraction compared to last year, it was at 28% versus 29.9%, and this was because of elevated cost in their marketing expenses. Well, their key parameters, that is their average room rate as well as the revenue per available room, that is revenue per, that showed year-on-year growth, but on sequential basis it saw a decline, and that was owing to seasonal factors. And the company said that they will be retaining their forecast of double-digit growth in their revenue per available room. Now, we had the management on our channel today, and the management did say that the demand will continue to outpace the supply. Q3 and Q4, they will be the strong quarters. The top line growth and margin expansion will be seen going forward in the long term, and that is because of high occupancy rates as well as the increase in the average rates. And this is the World Cup, the Miss World pageant, that will lead to exceptional second half for the industry. So this is on Indian hotels. It's trading above 1% as we speak.
Alright, moving on then, Dhwani, ONGC is also a stock in focus. It has given a return of almost more than 18.5% in the last 6 months. What are the charts saying for this counter?
So what are we seeing currently today is a very volatile move over in this particular counter, which also gives more insight into the technical side of it. The stock has given a rise up at 175 and taking a dip in today's session, but the stop loss over here ideally comes at 168.5. One could go long into this particular counter at any dip, even if you get till 170. 168.5 is a good stop loss over here for a target of 180 to be played out.
Keep an eye out on those levels for ONGC. Let's move on, talk about Greenlam on the back of its numbers. Harsh, how are they looking like?
Well, EBITDA came in strong again for Greenlam as well. You're seeing revenue which was up around 10% or thereabouts year over year. You're seeing EBITDA which went up by almost 28% year over year. So you're clearly seeing margins coming through. From that 10.7%, margins have improved to 12.5%, therefore aiding profitability higher. Profits were up 32% and the stock price as well responding to that. In fact, it really shot up in early trade. It was up nearly 3 to 4% more than where it is currently, but of course it's come off from those slightly higher levels. Currently settled 3.5% higher.
Okay, surely keeping an eye out on that one. But let's move on and talk about Birlasoft. Yes, they did come out with their numbers, but what we also have now is the con call highlights coming in. And what is coming and what is interesting is that now they've given margin in its as an exit rate they're expecting at 16%, which analysts believe is showing some bit of a trust in the new process of the deal wins. That will be a key positive for the company. Now, in terms of the TVC, the company highlighted in the con call that the growth comes on the base of 2 very strong quarters that they've seen coming in. So yes, on the back of that, they are expecting growth there. Deep expertise in terms of the Microsoft AI Azure is at 500 employees are being trained for this generative AI process as well. And IT services industry will see an impact of the tepid macro environment for a good part of the financial year is what they are highlighting. Now, in terms of the full year order book, they said that that is unchanged. And what they're expecting is a better than industry top line. Margin expansion is what they're expecting. Like I mentioned, the exit rate of around 16%, which was the key important highlight that we are watching out for as well. So let's keep an eye out on Birlasoft today, also trading with gains of almost 3% as of now as well.
Alright, moving on then, the next counter in focus is ACC. ACC came out with its Q1 results, and Motilal Oswal has also come out with a note on ACC, and they are maintaining a neutral stance with a target price of 2,180 rupees per share. They're seeing strong performance led by lower costs and higher volumes for ACC, and also the results were a surprise because the company was operating at a 100 plus capacity utilization level now with control operating costs. So beat coming in on all the fronts. They've also raised the FY24 and 25 guidance for EBITDA by 25% and 23% respectively, given the significant beat that's come in on the quarter numbers and the management's guidance of sustaining the current cost structure. However, there was a note on Macquarie as well today on ACC, and they are maintaining a neutral stance with the target price of 1,998 rupees per share. Now, according to them, it was a solid set of numbers. The key surprises were on the 24% year-on-year volume growth. They also see ACC valuations reflect the expectation of growth lagging peers, as promoters are likely to focus on Ambuja, and on the back of that, ACC is going to be in focus today.
That is ACC for y'all. Let's look at the flashes that are coming in your screen, and that's the next stock that we're going to talk about. That is Green Panel. Look at the stock. That's seen a bit of a fall coming in right now as well, because the revenues of the company, they've come in at 386 crore versus 464 crores last year. So decline coming in terms of the revenues of the company. Profits of the company have almost halved as well. Last time it was around a 78 crore that we saw in terms of profit. This time it's just around 37 crores. Margin seen a sharp contraction, very sharp contraction. 17% is what the EBITDA margin has come in at versus just a 28.4% last year as well. So, contraction in terms of margins, 17% versus 28%, sharp contraction of more than 1,000 basis points in terms of margin is a clear pressure that we are seeing in the stock as well. And obviously in terms of the EBITDA performance, that has also halved. EBITDA has come in just at 66 crores versus 132 crores. That is why we're seeing the pressure coming in on the stock as well. We saw a bit of a dip coming in there as well, and as of now also the stock is down 3% in trade as we speak. Clear pressure coming in on this one, and that is Green Panel Industries on the back of its numbers.
Right, and moving on, then the next counter in focus is Axis Bank. Dhwani, tell us what are the charts saying for Axis Bank then?
We've already seen banking being in a bit of a pressure since the last few sessions. Overall, the fall indicating in Bank Nifty also is due to this private banks, where ICICI, Kotak, Axis, they all are showing bearish structures. Axis seems more bearish from the current levels also in these stocks that we're talking about. We are seeing a dip over here in Axis Bank coming up to 928 levels. One could ideally put a stop loss over here at 950 and could trade on the short side of this particular counter as well.
Okay, surely keeping an eye out on Axis Bank and those levels over there. But let's move on and talk about Garden Reach. Today they came out with an announcement saying that the company will be launching an autonomous underwater vehicle. Now, because of that, we saw a sharp spike up coming in the stock when the early morning trade, when the announcement was actually made. As of now, also holding on to gains of around 1.5%, so not bad. Now, these plans are actually to unveil a ship-based unmanned aerial vehicle and unmanned surface vessel by the end of this year. And on the back of this news flow, we've seen that Garden Reach today is in focus and trading with gains of almost 1.5% as of now.
All right, moving on to the big boy, Reliance. Dhwani, Reliance, tell us what are the charts penciling in for Reliance then, and what should the investors do?
So we just talked about Bank Nifty, but compared to that, what we are seeing in Nifty is a bit of a subdued down move. We are not seeing much of a fall coming in, and we're talking about the indexes. It's really very important now to talk about the big daddies over here. We're talking about Reliance, we're talking about Adani. We are constantly seeing some kind of a shuffling happening between the two names over here, and every time one is moving, the other one is taking a downside over here. What we are seeing in Reliance, particularly as a chart structure, is we definitely saw a breakdown coming in on this particular one, and in the last 4 sessions, we are seeing a sideways move that is continued in this particular counter. An upside breakout comes at 2540 in this one, and a downside breakout of this particular one is 2500. So this 40 points of a move is there, where Reliance is currently trading. A breakout on either of the...
Okay, Dhwani, I think we've snapped that line, but that was Dhwani's view coming in on Reliance. Keep an eye out on those levels she mentioned about the upside over there as well. But with that, viewers, we are absolutely out of time on this edition of Market Fatafat on ET Now. Thank you so much, Dhwani, Harsh, Lisa, as well as Amar for joining in with us. It's going to be a goodbye from Ankita, myself, as well as the team who put this show together.